Welcome back, folks. I am John Najarian from MarketRebellion.com. We've got great streaming shows throughout the day. My brother Pete does a video before the freaking sun comes up, and then I do my workout videos and so forth. And we share an awful lot of information with some of the writers and strategists and traders over at Market Rebellion throughout the day. So make sure you continue to check it out. With that said, let's get into three. Disclaimer, that's just that this presentation is for educational and informational purposes only. I don't have to read all of it. You guys can read it at your leisure, but it's basically us just saying these are trades that I may have put on, my brother Pete may have put on, any of our strategists may have put on. I will describe for you the ones that I am presently in as we go through the deck, starting with, bang, yesterday. Take a look at this one, folks, because yesterday we talked about IWM. And as you can see, all of our information is time-stamped on our website, so the thousands of folks that subscribe to us could actually vouch for each and every one of these trades, or you could become a subscriber and see it for yourself. So for instance, yesterday, at a little after 10 in the morning, we put up the unusual activity in the IWM. That's the small cap. And I talked about it yesterday on our show. The small cap index, the IWM, was trading at about 105.49. You can see it on yesterday's show. And we talked about the May 115 calls trading for $3.31. As I always try to do for you, each and every one of these options is for 100 shares of that ETF. So that means that instead of $3.31 for the option, it's $331 because every option is for 100 shares. So you basically just move the decimal place over. So $331 times 10,000. And keep in mind, that was bought in one print, folks. So somebody stepped in and paid $331 10,000 times. So how'd they do? Well, you tell me. There it is today, traded up to 112, and now at, with a little over, I guess a little under now, an hour before the close, we're seeing it at 111.49. So a big jump, almost 2% today. As it made that jump, how did those May calls do? Let's take a look. May calls, as you can see from my trading screen here, IWM Russell, those IWMs with 50 days to go till May, we're trading for 773. The ask and the bid was 746. And basically the last trade was $8. The open interest was 11,000, so you know that yesterday's trade was opening new transactions. And we took some profits in here today. I did because why? Well, they more than doubled. $3.31 is what we paid yesterday. Today, they traded through $8. So, bang, you got to be disciplined. DDA, discipline dictates action. And that's what we try to do every day, folks, is give you guys an idea that it's really important to take some of those profits off the table. A lot of people make the mistake of thinking that when you trade, it's all about cutting your losses. No, it's about making sure you take money off the table on your winners as well. Been doing this for 38 years. I know a thing or two about trading. I'm not saying I'm the greatest trader in the world. I'm pretty good, but I'm saying one discipline that I have taught myself that has served me well has been taking money off the table on those winning trades. So that was yesterday. Now let's get to some fresh meat today. EPI. So this one is an ETF that tracks the Indian markets. So Indian markets, India is a great growth area. We all know it's over 1 billion people. We also know today that they were all told to shelter in place. In other words, same order we've been given here in Chicago or out in New York. They're saying shelter in place for the whole country. And This is a country much like the Italians that has close relationships where multiple generations are frequently in the same abode. What does that mean? That means that this could spread through there like crazy. And that's why they're probably very smart to be sheltering in place. Now, in the meantime, what happens to their economy? What happens to our economy? Well, we know we have this multi-trillion-dollar bailout. India's got to decide how they're going to deal with this. So when we see July 13 puts being purchased, these are puts that aren't April, which is 1 month out, or May or June. These are 4 months out into the future. Somebody wanted to put under the market. The at the money put would be the 1550s. These are out of the money, beneath where that market is trading. So no one's going to exercise the right to sell it at 13 when it's trading 1550, but they might be looking to say, well, I want to profit if this market goes down. Or if they have a lot of these ETFs, I need some protection, an insurance policy, if you will, against my holdings. So what do? In either case, they might go out and buy these July 13 puts. Let's take a look. As you've seen, it has made a nice bounce beginning just 2 sessions ago, where 24th of March, it was bottoming down around 14 bucks. It bounced up here to about 1560, a 6% rally. And then on that rally and on the shelter in place and the worries about what's going on there, somebody decides to purchase a bunch of puts. I am in these puts spread. I'm in a put spread at the 15 strike down to the 13 strike. But, you know, that's just a different way to slice it than how other people have decided to do it. The big activity has been at that July 13 put strike. All right, that's the first one. Next one, take a look at General Electric. General Electric, somebody wants an upside call bet. They want it out there in May. So again, 2 months into the future. April, May, they're 2 months out into the future. Strike price 8. So that's 50 cents above where it's trading right now. Now this one's made a nice rebound already, folks. So they're paying approximately 10% of what they'd pay to own the stock. In other words, if they want to own GE at $8, it's going to cost them 83 cents. So I think a lot of us would look at this and say, you know what? If you like GE here, why wouldn't I write these options against it and therefore have about 10% downside protection, a little more than that, of course, by selling these puts against stock that I buy here at 750. That's just showing you different ways people are going to attack this. Now, this particular trader was buying these May 8 calls for 83 cents. So some of you might do that. Some of you might buy the 7s, sell the 8s, and get into a spread that way. Either way, it works. Each option's 83 bucks. 10,000 of them is 10,000 times 80. So this is a pretty, $800,000 bet that GE goes higher. Here's the graph. As you can see, in the last 2 days, it has rallied dramatically. It has come up from approximately $6.20 up here to $7.76. So that's the second trade for our 3 at 3. Let's see what the final trade is. KMI, Kinder Morgan. All right, bullish call buying. Somebody stepped in, bought about 4,400 of these April 1450 calls. Bought those in one single print. So we know it's the same buyer because it's only one print. So they stepped in, bought at the 1450 strike, which is just out of the money. In the money would be the 14 strike, of course. They were buying just out of the money. And what did they pay? Well, they paid about 95 cents. So they paid 95 cents for these calls, 4,400 times. 95 cents, of course, is $95. Moving that decimal place over again. $95, 4,500 times. See what the chart looks like. There's our chart. Again, from all the way to last Friday, when this one was a $10 stock, it's made a nice move to the upside. And Kinder Morgan, somebody that moves with these pipelines, energy across the country, keep an eye on this one. They're a toll collector for moving that energy. And maybe because the stimulus package, people are betting that more and more businesses get back to work in the next 14 to 30 days. Keep an eye on this one. Again, which strike were they buying? April 1450. So this is the most short term of any of the options that I've talked about today. Well, with that said, folks, I thank you for joining me. That's our 3 at 3. We'll be refreshing tomorrow and taking a look at exactly what is happening in the markets for unusual option activity, or UOA. I encourage you to tell your friends about it and to check out marketrebellion.com for more. That's marketrebellion.com. Or if you want to check out our seminar for people that want to learn more about trading, going to have a great lineup out there in Vegas, September 25th and 26th. We're going to have Tony Dwyer, who does a great job over at Canaccord. We're going to have Jeff Mackey, myself, my brother Pete. More speakers to be announced shortly, including Bedros Koulian, who runs Fit Body Boot Camps. They've got over 600 of these Fit Body Boot Camps across the country. He is a great entrepreneur. He will inspire you. I know you'll have a great time. Check it out. That's marketrebellion.com/Vegas 2020. marketrebellion.com/Vegas 2020. Thank you for joining me, folks. I hope you have a great rest of your day, and we'll see you back here tomorrow on Market Rebellion 3 at 3. Thank you.